Hello and welcome back to CEO.CA's Inside the Boardroom. My name is James Pettam and today I'm joined by Paul Parisotto, President, CEO and Director of Moon River Capital. Paul, it's great to see you today.
Good to see you as well, James. How are you doing today?
I'm doing fantastic. I'm excited to talk about Moon River and some big updates that have just come out. But maybe we could start with a bit of background. What are the key facts about Moon River Capital and how did you end up at the company?
Excellent question. Moon River Capital has the rights to develop and mine one of the highest grade, if not the highest grade, Moly deposits in the world, located just in Smithers, British Columbia, with excellent infrastructure. In BC is a good place to do business, so it's got a good jurisdiction. We've recently completed a preliminary economic assessment, and which had, I think, excellent results. And so what drew me to this deposit is its high grade and where it's located. Having one of the premier moly assets in the world doesn't come around very often. So the ability to advance, develop, and take this deposit into production is what drew me to this opportunity.
Great, thank you for that summary. And we're going to talk a bit about the Davidson Project in a few moments, but I'd like to talk a bit more about the team at Moon River. You've assembled an impressive management team. Can you tell us a bit more about their background and the experience they bring to the table?
I'm so glad that you asked that question. Our company is led by Ian McDonald, our chairman, who has over 40 years of capital markets and mining experience. And what's of particular interest here to your listeners is Ian was the founder of Blue Pearl and Thompson Creek, which owned the Endako Deposit, and at one time also had the Davidson Deposit. And that was a tremendous success in the marketplace. So having Ian as our chairman and leading the company is a blessing, and we're so grateful that he's involved, and I'm grateful as a CEO that he's there beside me as my partner. Also on our board of directors is a man named Gordon Reed. Gordon's recently retired, but he was the former chief operating officer of Centerra, and Centerra, owns 75% of the Idaco complex, which we'll talk about in a few minutes. So having his expertise and knowledge is critical. Another board member is Jamie Levy, and Jamie is the CEO of Generation Mining. They're our largest shareholder, so he brings a lot of mining and capital markets expertise to bear. And the last person on our board is Alice Murphy. Alice is a chartered accountant. She's has First Nations experience. She was the CFO of Aber Diamonds, and she has regulatory and government experience as well. So that's a great board of directors for a small company like ourselves. And then lastly, we have Tong Yin, a very experienced CFO, who's our CFO, and Lorna McGillivray, that has decades of legal expertise, and she's a lawyer, and she's our in-house counsel. And there's one other person I want to mention as part of our team, and that's a guy named Mark Wilson. And Mark recently retired as well, and he ran the Moly division for Centerra. They called him Mr. Moly when he worked there. So we all have a little bit of gray hair and experience, but I think that's very useful and helpful as we advance, these opportunities and these assets that we're developing.
Yeah, I mean, you're absolutely right. I think a management team that it has a track record of success is certainly one of the key factors that investors look out for when they're looking at exploration and development projects. And you mentioned there's a history with the Davidson Deposit in the management team already. Can you walk us through a bit more of that project? What's the history behind Davidson? Why is it such an exciting opportunity?
So the Davidson Deposit is located in, sort of central British Columbia, right next to Smithers. It was first discovered in the late 50s, and it was drilled off. And like I mentioned before, it's perhaps the British Columbia government website says it's the highest molybdenum deposit in the world. And having that really, really high grade, helps an awful lot and can solve a lot of problems when metal prices fall. And the moly market can be a little volatile at times. But this deposit was drilled off. A portal was opened up into the deposit, and the former owner of the deposit acquired another producing moly mine not too far away, and so Davidson kind of got put on hold, and it sat there. And then in 2008, Hatch Engineering did a feasibility study. It's much different than the PEA that we've done, and so there's been millions of dollars of spent on developing this asset. It's all drilled off, and so what we're doing now is mostly engineering studies to advance it. So it's a bit unique in that way.
Yeah, it's certainly an interesting proposition. I mean, the highest grade molybdenum mine, right in an accessible area near Smithers in BC. I want to talk about a neighboring project, the Endako Mine. You announced your intention to acquire a 25% stake in this project back in February. Now that 60-day period has passed, and as I understand it, the intention is to close on this deal and to acquire that 25% stake. Can you tell us a bit more about why you've gone after the Endako Mine, what the relationship is going to be like with the Davidson Project? Will Endako become the new main focus, or will you be pursuing a dual development strategy? And what are some of the most important aspects of the deal that people should understand?
So great question. So before I answer that question, let me step back just for a couple more comments regarding the Davidson deposit. So in 5 months, we've accomplished quite a lot for a small new company. We closed a financing to raise $3 million in middle of November and acquire the Davidson deposit. Subsequent to that, towards the end of February, we announced the results of a preliminary economic assessment. And that assessment for the Davidson deposit said we'd mine, 2.5 million tons a year, and it would have a net asset value of over $600 million. And the capital required to build this mine would be about $575 million, and that includes $110 million contingency. A very, very robust deposit, and we're mining, sort of the highest portion of it for 20 years, producing about 10 million pounds of moly a year. The cost to produce a pound of moly is around $8 US. Moly's trading over $20 US currently, so we have a pretty decent margin. In addition to that, there's a couple of other key things that are important to remember. All of the mining, it'll be underground mining using bulk electric machines to do this bulk mining, and we're going to locate our processing facilities underground, so there'll be no carbon emissions. It'll minimize what people see from Smithers and the surrounding area. Won't see anything, and it's really a mine for today and going into the future, the way it's been constructed to be mined. And in addition to that, we're fortunate enough in going back and looking at the old drill core that we found out that there's other minerals that are in the deposit. So those numbers I just talked about were just for mining moly, but there's a lot of tungsten, and there's rare earths, and there's gallium, and there's copper. So in the next phase of work to develop this is to determine if we could economically recover the tungsten, rare earths, gallium, and copper. So we're going to be doing a little bit of drilling, a very limited program this summer, to collect some fresh drill core to allow us to do the proper assessments if we can recover these elements, which we're hopeful that we can, and we think will significantly add value to the deposit. And while that's going on, we're going to start to do some, collect some data for environmental assessment work and move quickly to advance the Davidson deposit towards a production decision, because we believe it warrants it. That process will probably take, 5 to 8 years. while that's going on, we also want to be in a position where we can generate potential cash flow for our shareholders. And that's where Endako comes in. And so, as you mentioned, we negotiated a transaction with Sojitz that owns a 25% interest in the Endako complex. And we're acquiring that, well, I should say we're stepping into Sojitz's shoes for that. They're going to be paying us $43 million to step into their ownership position of the Endako complex. Why are we doing this? So the Endako complex has, it's been around since the 60s. It mined continuously until 2015 when it went on care and maintenance. It has a 55,000 ton a day brand new mill that was completed just a few years before that. And it's a low grade, but a large tonnage open pit situation. But when it was shut down, moly prices were in the low teens. And as I mentioned earlier, moly's currently trading at $20.50 US. So we think there's an opportunity here to go back in and do a study and update the costs and see what it would take and what the returns would be to put the Endako complex back into production. And that makes a lot of sense for us as a company that's focused on molybdenum, because we have the Davidson Deposit that we're advancing, and now we own a quarter of the Endako complex. We will soon own 25% in the Endako complex. And there's only 160 kilometers apart. There's a rail that goes from Smithers to Endako. And in terms of synergies, apart from having just our management team located in BC and Smithers doing both, there could be potential other opportunities to generate cash flow and reduce costs. And in addition to that, there's a lot of tax losses at Endako. And, our preliminary work suggests there could be $150 million of tax losses that Moon River would like to crystallize and tap into to enhance the value of the entire company. So there's a lot of things happening, and we're really excited about what we have on the table in front of us, and bringing these things forward and adding value for our shareholders, but also for the local communities, for the province of British Columbia, for the First Nations that are in the area, and creating jobs. Both the Smithers area and the Endako area, they want jobs, they need jobs, and this could be a win-win-win for everybody, a win for our stakeholders, a win for the local communities. And so we're super excited.
Yeah, it's a really exciting update, and interesting to see this strategy of Endako with the potential for nearer term cash flow while you're going after this monster deposit at the Davidson Project. You mentioned that Endako's been on care and maintenance for a few years. Put on care and maintenance at a time when molybdenum prices were a little lower. What do you anticipate the timelines and the cost to get the Endako project back up and running again?
So great question, and I don't have specific. Unfortunately, I don't have specific answers for you. First step is we have to actually close the transaction with Sojitz to step into their shoes, and I want to get into that a little bit in a couple of moments. And then the next step for us is to sit down with the management team of Centerra. They are absolutely top drawer. They are well respected in the industry, and have a discussion with them where, we'd like to see a study, initiated and completed as quickly as possible to evaluate, the possibilities of putting Endako into production and see what that means. It would benefit both ourselves and Centerra, of course, to have an asset that's generating positive cash flow. So we're going to work very, very closely with them, roll up our sleeves, and do all that we can to quickly determine what that could look like. So I hazard to throw out numbers until we've done the proper work.
Yeah, absolutely. I mean, makes sense. Still very early stages of that project, and having just.
And if I may, James, so that your listeners understand, the deal that we've structured with Sojitz has a few different components. So of the $43 million that they're paying us, 41 is going to go into, I'm going to call it an escrow account. About 12.5 million of that is going to fund ongoing care and maintenance costs, which hopefully we can eliminate if we get the project back into production. That should carry, at least in our work done so far, that should carry us for 4 to 5 years. The balance of the funds are going to be used for reclamation bonding purposes. And so we're looked after for at least 5 years, and that based on the work we've done so far. Things could change, but based on the work we've done so far. So that protects Moon River and its shareholders for at least 5 years, and we're approximately 5 years. And then $2 million is going to go on to our balance sheet. There may be some future payments up to $10 million payable to Sojitz if Moly trades above $26. We have to pay them up to $10 million over a 6 year period. So we think it's a well structured transaction for the shareholders of Moon River, and it gives us some runway and some time to continue to advance these things, and knowing we have the capital in place to look after our obligations. So
certainly de-risk the project having that size of investment up front. I wanted to touch just a little bit on the molybdenum markets. You've touched on the price a few times so far. You mentioned it can be a fairly volatile market, but can you walk us through what are the fundamentals underpinning it? What are the supply and demand? And what are the kind of key factors influencing the future of the molybdenum market?
So great question. So for those that don't know, molybdenum is a metal that is not easily replaced. It has anti-corrosive, and it adds strength and hardness to steel. So it's used a lot in steel alloys. And it's going to be necessary for the decarbonization of the world. It's a critical mineral like in Canada and other parts of the world. It's got lots of uses in the nuclear, in the wind turbine, and just in general steel alloy business. It's been growing at about 4 to 4.5% per annum since 1950. In 1950, the world consumed about 30 million pounds of moly, and now we're up to 630 million pounds. There's only two or three primary moly mines in North America. There's two in Colorado that are owned by Freeport-McMoRan, and there's the Davidson and the Thompson Creek deposit that Centerra owns that are going through work to maybe put them back into production. China is a big player in the moly space, as you may guess, and they're at a place right now where they're importing. They're consuming more than they produce because they are a producer. But in a couple of years, they should be in an equilibrium, perhaps even in a surplus position. And the West wants to ensure that it has alternatives, to its critical supply chain, and that's where this comes in. Now, about 3/4 of moly is supplied and comes from copper mines as a byproduct. They're producing it whenever they produce copper. But a lot of the world's copper mines are getting a lot older. The grades are dropping. There's not that many new copper mines, that are coming on stream soon. So we think that supply demand could be favorable for moly prices. The 2-year trailing average is 21.50. That's the number we used in our PEA. A year ago at this time, moly was $25, $26. So we're confident that the prices will continue to rise. With the Davidson Deposit, we have lots of margin from cost to from where the costs are, where moly is trading at, and we'll see with the Endako what that holds for us.
Very well, Paul. Thanks so much for chatting with us today. Just to wrap up Is there anything else that we should keep in mind about Moon River Capital?
I think I've covered most things off. And of course, people, please reach out to the company if you have further questions, comments. We'd love to hear from you. Please subscribe to the CEO.CA website and get on their list, and follow us on LinkedIn, CEO.CA, and please go to our website. Thanks, James.
Paul, pleasure chatting with you. Looking forward to having some more updates throughout the year from Moon River.
I do too. Thank you so much.